On March 15th, 2023, something happened that should have been front-page news everywhere, but most Americans missed it completely. Saudi Arabia announced it would accept Chinese yuan for oil sales to China, not dollars yuan. For the first time in 49 years, the world's largest oil exporter agreed to sell its most critical commodity in a currency other than the US dollar. The petrodollar monopoly, established in 1974, was broken. This wasn't just a trade deal. This was stage 6 of an 8-stage collapse pattern that has destroyed every reserve currency in history. The Portuguese real collapsed in the 1600s. The Dutch guilder collapsed in the 1700s. The British pound collapsed in the 1900s. And now the US dollar is following the exact same pattern stage by stage, crisis by crisis, and we're entering the most dangerous phase where alternatives gain critical mass and the collapse accelerates exponentially. Here's what most people don't understand. Reserve currency status isn't permanent. It's a cycle that lasts 80 to 110 years. The currency rises, it dominates, it overextends, competitors emerge, confidence cracks, alternatives gain adoption, crisis accelerates, and replacement happens. We've seen this pattern 3 times in the last 500 years. And every single time, the dominant power refused to believe its currency could fall. They thought they were different. They thought their system was too big to fail. They were wrong, all of them. The dollar is currently in stage 6 of 8. Alternatives are gaining adoption. The petrodollar is cracking. BRICS nations are building parallel systems, and the timeline based on historical patterns says we have 10 to 15 years before the dollar loses reserve status entirely. Not eliminated, but no longer dominant. And when that happens, America's ability to print money and export inflation ends. The $36 trillion debt becomes unpayable. Interest rates spike. Living standards fall 30 to 40%. This is the most important economic story of our lifetimes, and almost no one is paying attention. Let me show you the exact 8-stage pattern that destroyed 3 previous reserve currencies. Where the dollar is right now in that pattern, the specific mechanisms that are accelerating the collapse, why the petrodollar's death is different and faster than previous transitions, who profits enormously and who gets destroyed, and what the timeline looks like based on historical precedent. Because this isn't speculation, this is pattern recognition. And the pattern is screaming that the dollar's dominance is ending. Before I show you the 8-stage pattern, you need to understand what a reserve currency actually is and why it matters. A reserve currency is the currency that countries around the world hold as their primary foreign exchange reserves. Central banks accumulate reserves to facilitate international trade, pay debts, and stabilize their own currencies. When a currency becomes the reserve currency, it creates massive advantages for the issuing country. First, structural demand. If every country needs dollars to trade internationally, they must constantly buy dollars. This creates permanent demand regardless of the underlying economy. Second, seigniorage. The issuing country can print money and exchange it for real goods from other countries. You print paper, they give you cars, electronics, oil. This is an extraordinary privilege. Third, cheap borrowing. Because everyone needs your currency, they buy your government bonds, letting you borrow at lower interest rates than fundamentals justify. Fourth, exported inflation. When you print money, the inflation is spread globally because everyone holds your currency. Your inflation becomes the world's problem. These 4 advantages are why reserve currency status is the ultimate economic weapon. But it's also why losing it is catastrophic. When your currency is no longer needed for trade, demand collapses. Your government can't borrow cheaply anymore. You can't print money without causing immediate domestic inflation. Your living standard, inflated by decades of seigniorage, crashes back to what your actual economy can support. This is what happened to Portugal, the Netherlands, and Britain. And it's what's beginning to happen to America. Stage 1 is dominance established through economic and military superiority. A currency becomes the reserve because the issuing country is the dominant economic and military power. This creates trust. Everyone believes this country and its currency are stable, backed by real strength. Portugal in the 1500s controlled the spice trade. Portuguese ships dominated the route around Africa to India and the East Indies. Spices, pepper, cinnamon, cloves were worth more than gold by weight. Portugal controlled this trade through military superiority at sea and strategic ports like Goa, Malacca, and Macau. The Portuguese real became the currency of Asian trade. Merchants needed reals to buy spices. The Dutch Republic in the 1600s had the most efficient economy in Europe. Amsterdam was the trading capital of the world. The Dutch East India Company, VOC, was the richest corporation ever, worth $7.9 trillion in modern terms. Dutch ships controlled Baltic, Asian, and New World trade. The guilder became the reserve currency because Dutch financial markets were the most sophisticated. The Amsterdam Stock Exchange, founded in 1602, was the world's first. The Bank of Amsterdam, founded 1609, was the world's most trusted bank. Everyone held guilders because Dutch finance was the safest and most liquid. Britain, after defeating Napoleon in 1815, was the global superpower. The Royal Navy controlled the seas. British industry dominated manufacturing. The British Empire covered 1/4 of the world's land and population. The pound became the reserve currency because Britain controlled global trade. The gold standard, established by Britain, meant pounds were convertible to gold at fixed rates. This made pounds as good as gold. By 1900, 60% of international trade was invoiced in pounds. After World War II, America had 50% of global GDP. The U.S. military was unchallenged. The Bretton Woods Agreement in 1944 made the dollar the official reserve currency, convertible to gold at $35 per ounce. Other currencies pegged to the dollar. The dollar was as good as gold because America held most of the world's gold reserves. Even after Nixon ended gold convertibility in 1971, the dollar remained dominant through military power in the 1974 Petrodollar agreement with Saudi Arabia. Now, stage 2 is peak power and overextension. At the height of power, the dominant country overextends. It fights wars it can't afford. It borrows excessively. It prints money to fund imperial projects. The currency remains strong because of inertia. Portugal controlled the entire spice trade but overextended, trying to maintain military presence across dozens of ports with a very small population. Debt service consumed 60% of royal revenues, but the real remained strong because of monopoly. The Dutch fought 3 wars with England in competition with France. Military spending soared. Debt accumulated, but the guilder remained dominant because of Amsterdam's infrastructure. Britain maintained the largest empire and navy at enormous cost. New competitors emerged. By 1914, Britain was a net debtor to America, but the pound remained dominant. America overextended through Vietnam, the Cold War, Iraq, and Afghanistan. By 2008, U.S. debt reached $10 trillion. The dollar remained strong due to the petrodollar system and lack of alternatives. Well, stage 3 is competitors building alternatives. England and the Dutch built rival trade networks. Britain built financial infrastructure to rival Amsterdam. America built its own to rival London. After 2008, China and Russia built alternatives. CEPs, SPFS, and BRICS financial plans. Stage 4 is weaponization. Portugal seized ships. Britain froze assets. America used sanctions in 2014 and again in 2022 by freezing Russia's reserves. This convinced the world the dollar system was unsafe. China reduced U.S. Treasury holdings. Saudi reduced dollar reserves. Central banks bought record gold. Alternatives accelerated. Stage 5 is confidence cracking. The real declined after 1580. The guilder declined after 1780. The pound declined after 1913. The dollar peaked at 71% in 1999, and by 2024 it dropped to 58%. This is stage 5. Stage 6 is alternatives gaining critical mass. Network effects flip. Saudi Arabia accepts Yuan.For oil. Saudi joins BRICS, SIPs doubles in volume. BRICS plans a common currency. Trade bypasses the dollar. The alternatives are gaining critical mass. Here's the key metric. In 2022, 73% of international trade was invoiced in dollars. By 2024, it's 58%. That's a 15 percentage point drop in 2 years. This is the network effect flipping. Merchants are choosing non-dollar currencies because their trading partners accept non-dollar currencies. The spiral is starting. Stage 7 is crisis acceleration and panic diversification. Once the network effect flips, a crisis accelerates the collapse. War, financial crisis, or policy mistake triggers panic. Countries dump reserves, the currency crashes. The dominant power tries to stop the fall, but it's too late. The alternatives are too strong. The War of Spanish Succession, 1701 to 1714, destroyed what remained of Portuguese trade. Portugal sided with Britain. France blockaded Portuguese ports. Portuguese trade in Asia collapsed entirely. By 1720, the real was worthless outside Portugal. Napoleon's continental system, 1806-1814, blocked British trade with Europe, but it also destroyed Dutch trade. Amsterdam, occupied by France, was cut off from colonies. The guilder crashed. After Napoleon's defeat, the guilder never recovered. It became a minor currency. World War II was the crisis for Britain. Britain spent everything fighting Germany. By 1945, Britain owed $30 billion, 3 times GDP. Britain was bankrupt. The pound was devalued 30% in 1949. India gained independence in 1947, ending the jewel of the empire. The Suez Crisis 1956 was the final humiliation. The pound collapsed from global reserve to regional currency in 15 years. The crisis for the dollar is coming. It could be triggered by multiple factors. First, BRICS currency launch. If BRICS successfully launches a gold-backed currency for international trade, it creates a credible alternative. Oil producers might accept it. This would break dollar demand. Second, U.S. debt crisis. Federal debt is $36 trillion. Interest payments, $1.2 trillion annually. If bond markets lose confidence, yields spike. The Fed must print money to buy bonds. Inflation surges, dollar crashes. Third, military overextension. If America is simultaneously committed in multiple conflicts, Taiwan, Ukraine, Middle East, and can't win decisively, credibility collapses. Fourth, commercial real estate defaults causing banking crisis. If 501,000 regional banks fail due to commercial real estate, confidence in U.S. financial system breaks. Any of these could trigger Stage 7, crisis acceleration, panic diversification, countries dump treasuries. The dollar falls 30 to 50% against other currencies in months. This forces the Fed to raise rates dramatically to attract capital, causing recession, or print money dramatically to buy treasuries, causing inflation. There's no good option. Stage 7 is the collapse. Stage 8 is replacement. A new dominant currency emerges. After the crisis, a new reserve currency emerges. Not immediately, but over 5 and 10 years, one currency becomes the new standard. The old currency still exists, but it's no longer dominant. The guilder replaced the real gradually. By 1680, most international trade used guilders. The real remained Portugal's domestic currency, but globally irrelevant. The pound replaced the guilder gradually. By 1815, most international trade used pounds. The guilder remained the Netherlands' currency, but no longer global. Bretton Woods 1944 made the dollar the official reserve currency, but the transition took 15 years. In 1950, the pound was still used widely. By 1960, the dollar was clearly dominant. By 1970, the pound was secondary. The replacement for the dollar isn't clear yet. 3 possibilities. First, Chinese yuan. If China's economy continues growing and fiat becomes the dominant payment system, the yuan could replace the dollar. But the yuan has problems. Capital controls, lack of transparency, authoritarian government that could freeze assets. Second, the multipolar system, euro, yuan, and dollar all coexist as regional reserve currencies. No single dominant currency. Third, gold or gold-backed currency. If BRICS currency is genuinely backed by gold and commodities, it could become neutral reserve alternative. The replacement will be determined by which system offers most stability, liquidity, and trust. Now, let me show you why the petrodollar's death is different and faster than previous transitions. Previous reserve currency transitions took 30-50 years from peak to replacement. The dollar's transition will be faster. 20-30 years from peak 2000 to replacement, 2030-2050. Why? First, technology accelerates everything. In 1914, moving gold reserves between countries took weeks. Ships, railroads, physical transport. Today, moving billions in reserves takes seconds. Digital transactions. This means de-dollarization can happen much faster. Countries can dump treasuries and buy yuan or gold in minutes. Previous transitions were slow because logistics were slow. This transition will be fast because digital finance is instant. Second, alternatives already exist. In 1940, when the pound was failing, there was only one alternative, the dollar. America was the only economy large enough to be reserve currency. Today, there are multiple alternatives. The yuan, the euro, gold, BRICS currency, cryptocurrency. This means countries can diversify immediately. They don't need to wait for an alternative to be built. The alternatives are ready. Third, the petrodollar was artificial. The Portuguese real, Dutch guilder, and British pound were backed by real economic dominance, trade, manufacturing, financial sophistication. The petrodollar since 1974 has been backed by an agreement with Saudi Arabia. Oil only in dollars. But that agreement was political, not economic. Once the political relationship weakens, the petrodollar ends instantly, and it's weakening now. Saudi Arabia is diversifying relationships, accepting yuan, joining BRICS. The petrodollar was always vulnerable because it was based on a single bilateral agreement, and that agreement is ending. Fourth, America is more indebted than previous reserve powers. Portugal, the Netherlands, and Britain had debt problems, but nothing like America's $36 trillion, 120% of GDP. When the dollar loses reserve status, America can't finance deficits, interest rates spike, austerity, or hyperinflation. Previous transitions were slow, partly because the declining power could manage decline gradually. America can't. The debt forces rapid adjustment. Fifth, globalization means faster contagion. In 1940, if Britain had a currency crisis, it affected the empire and some trade partners. Today, if America has a currency crisis, it affects the entire global economy instantly. $80 trillion in dollar-denominated debt globally. $21 trillion in U.S. money supply, $13 trillion in U.S. treasuries held by foreigners. If confidence breaks, the selling pressure is immediate and global. Previous transitions were regional. This transition is global. That makes it faster and more chaotic. 2000 to 2008 was peak dollar dominance. 71% reserve share petrodollar unchallenged America's military dominance after Cold War victory. This was stage 2 peak power. 2008 to 2014 saw the financial crisis damage confidence. China begins building CIP countries question dollar safety, but no alternatives exist yet. This was stage 3 competitors building alternatives. 2014 to 2022 saw Russia sanctions 2014 and co-money printing 2020 accelerate concern. Russia de-dollarizes, China expands C-hypes, but system still holds. This was stage 4. Currency weaponization begins. 2022 to 2023 brought the Russia SWIFT cutoff and 300 bait reserve freeze. This is the watershed moment. Every country realizes dollar reserves can be seized. Mass dollarization begins. March 2023 sees Saudi accept yuan. This breaks petrodollar monopoly. This was the transition from stage 4 to stage 5. 2023 to 2025 sees reserve share fall from 60% to 58%. Trade share falls from 73% to 58%. Central banks buy 1 trillion plus tons of gold annually. BRICS expands to 9 members. CIP's volume doubles. This is stage 5. Confidence cracks entering stage 6. Alternatives gaining mass. 2025 to 2030 will likely see BRICS currency launch projected 2026-2027. More countries accept non-dollar oil payments. Dollar reserve share falls below 50%. Trade share falls below 50%. Network effects flip. Using alternatives becomes easier than using dollars. This will be stage 6, critical mass reached. 2030 to 2035 is when crisis triggers panic. Possible triggers include BRICS currency success, US debt crisis, military overextension, banking crisis, dollar crashes 30-50%. Fed forced to choose print money, inflation or raise rates, depression. This will be stage 7, crisis acceleration. 2035 to 2050 is when new system emerges, either when dominance, multipolar system or gold-backed BRICS currency becomes primary. Dollar remains a major currency, but no longer the reserve currency. This will be stage 8, replacement. This timeline is based on historical patterns. Could be faster if a major crisis hits sooner. Could be slower if America successfully defends dollar dominance. But the direction is locked. The dollar is declining, and the decline accelerates. Now, let me show you who wins and who loses. Gold holders win massively. When reserve currencies collapse, gold surges. During British pound decline, 1940-1960, gold went from $35, official price, to eventually $850, OAs by 1980. When fully floated, 24x gain during dollars gold. Convertibility end, 1971, gold went from $35 to $800 by 1980, 23x gain. BRICS nations, when China, Russia, India, Brazil, South Africa, plus new member Saudi Arabia, UAE, Iran, these countries gain economic independence from US-controlled financial system. They can trade known currencies, hold reserves and diversified assets, avoid sanctions. Their geopolitical power increases as US power declines. Commodity exporters win. If oil, gas, metals, food can be sold in multiple currencies instead of just dollars, exporters have more leverage. They can demand better prices. They can choose currency that maintains value. Saudi Arabia accepting UN gives them negotiating power. They're no longer dependent on dollar system. Countries with low debt win: Switzerland, Norway, Singapore, Germany. Countries with strong economies and low debt benefit from dollar decline because they can attract capital fleeing dollar. Their currencies strengthen. They become safe havens. America loses the most. America's entire economic model for 50 years has been print dollars, buy real goods from other countries, maintain living standard above what economy produces. This is the exorbitant privilege of reserve currency. When that ends, American living standards fall. The trade deficit, $800 billion annually, becomes unsustainable. America must export more or import less. That means fewer goods, higher prices, lower consumption. Estimates say 20 to 30% decline in living standards over 10 to 15 years as dollar privilege ends. Dollar savers and bondholders lose. If you hold dollars, treasuries, dollar bank accounts, you lose purchasing power. Dollar devaluation of 30-50% means your wealth loses 30-50% of international purchasing power. A $1 million treasury portfolio becomes worth $500K, $700Ks in real terms. Domestic inflation might be lower if US government controls prices. But global purchasing power collapses. Countries with dollar-denominated debt lose. Developing nations owe $13 trillion in dollar debt. If dollar strengthens temporarily before collapse as creditors demand higher rates, this debt becomes more expensive to service. But if dollar collapses, these countries' dollar revenues from exports decline while dollar debts remain fixed. Either way, dollar debt holders are squeezed. Wall Street and big banks lose. U.S. financial industry's dominance depends on dollar dominance. If international trade shifts to Yuan, Euro, or BRICS currency, transactions clear through Shanghai, Frankfurt, or Dubai instead of New York. Banking revenues fall, financial sector employment falls, New York's status as financial capital erodes. U.S. government loses ability to fund deficits. Right now, U.S. borrows $2 trillion per year. Foreigners buy $1 trillion in treasuries to get dollar reserves. When foreigners no longer need dollar reserves, they stop buying treasuries. Who funds the deficit? Either Fed prints money, inflation, or government cuts spending dramatically, politically impossible, or government raises taxes dramatically, economically destructive. All options are bad. The wealth transfer from dollar holders to non-dollar asset holders will be the largest in history. Trillions shifting from America and dollar holders to BRICS nations and commodity-notch gold holders. Let me end with this. The 8-stage reserve currency collapse pattern has destroyed 3 currencies in 500 years. Portuguese real, Dutch guilder, British pound. Each time the dominant power believed its currency was different, too important, too big to fail. Each time they were wrong. The decline took 350 years, but once it started, it was irreversible. The US dollar is in stage 6 of 8. Alternatives are gaining critical mass. The petrodollar monopoly established in 1974 broke in 2023 when Saudi Arabia accepted one. This wasn't just a trade deal. This was the network effect beginning to flip. When the world's largest oil exporter sells in non-dollars, it signals to every other country you don't need dollars anymore. And once that signal is sent, the spiral accelerates. The timeline based on historical patterns and current acceleration says we have 15 years before the dollar loses reserve status. Not eliminated, but no longer dominant. Dollar share falls from 58% to 35-40%. Trade share falls from 58% to 30-40%. This is a multipolar currency world. When 20-25%, euro 20-25%, dollar 35-40%. Gold BRICS currency, 15-20%, no single dominant currency. And when that happens, America's 50-year free lunch ends. The ability to print money and buy real goods ends. The $36 trillion debt becomes unpayable. Living standards fall. This is the cost of losing reserve currency status. Britain experienced it, 1970. America will experience it, 2025, 2050. The pattern is clear. The stages are defined. We're in stage 6. The collapse is accelerating and no one can stop it because reserve currency dominance isn't permanent. It's a cycle and every cycle ends. The Portuguese real collapsed, the Dutch guilder collapsed, the British pound collapsed, and now the US dollar is collapsing. Not tomorrow, but inevitably, stage by stage, crisis by crisis, until the replacement comes. If this documentary showed you a pattern you didn't know existed, if you understand now that reserve currencies follow an 8-stage collapse cycle and the dollar is in stage 6, then you need to subscribe, because over the next 10 years, I'll track every stage of this collapse. Every BRICS development, every dollarization milestone, every sign that stage 7 is approaching, the petrodollar is dying. The dollar's reserve status is ending. The 8-stage pattern is playing out exactly as it did 3 times before. History doesn't repeat, but it rhymes. And right now it's rhyming with Portugal in 1640, the Netherlands in 1800, and Britain in 1945. The dollar's dominance is ending. The timeline is 10 to 15 years positioned accordingly.